You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Nasdaq. From its inception, Nasdaq has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, Nasdaq proudly launched the Nasdaq 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the Nasdaq 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched Nasdaq 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on Nasdaq's full suite of index options products at www.nasdaq.com/NASDAQ-100-XND-NQX-NDX-VOLQ. Nasdaq, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever insightful, at least we tend to think so around these parts, Options Insider Radio Network. If I sound a wee bit different because I'm not coming to you from our Chicago studios, no, we're beaming in from the Southern studio here in Nashville for the Options Industry Conference this year. Had a great array of guests joining me already in the studio. Some of you folks on the pro side have already started to hear those shows. The rest of you will hear them trickling out to the network in the coming weeks, so stay tuned for that. A lot of great discussions about all things options, including, spoiler alert, a little bit of zero day may have filtered in there as well. But I'm pleased. We know we got tomorrow, big day, travel day. Hard to do Volatility Views at the usual time, but nonetheless, listeners, we got you your early dose of Vol Views this week, and I'm pleased to be joined in the studio this week in person. It's great to see him in person, Mr. Kevin Davitt, the head of NASDAQ Index Options Content. Kevin, welcome back to Volatility Views, and for the first time in person, sir.
Thank you for having me. I'm excited to be here, and this in-person stuff is really fun, whether you're talking about conferences or Vol Views recording.
It is fun indeed. And also joining us, alas, not in person, but making that college try nonetheless. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, beaming in from the dark and stormy shores of Maine. Mr. Rock Lobster, we miss you here down in Nashville, but how are things in the dark and stormy shores?
Actually, they're sunny and quite nice. So like I said, I'm going to try outdoor activity when I'm done with this show. But what are you guys down there for? A risk conference or something?
Yeah, just a little chatting, just a little hanging out, talking 0 day, nothing big, nothing like the whole industry down here for a couple of days or anything like that.
Oh, really? What? I think last time I was at a conference like that was probably 90. Oh my gosh, forever ago, like 93, maybe 30 years ago. Crazy.
Yes, you were not, the conference scene was not your forte, sir. But you know what is your forte is some vol. So let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity and all sorts of fun perspectives. And coming into this early show here, early Thursday show, listeners, man, they are liking themselves some market today. After most of this week, the market was kind of selling off, hanging out in the red. Seems like we were going to break that 4,100 level and hang out there below it for the rest of the week. We are now back above it again, listeners, hanging out right around 4,135. S&P up nearly 80 handles today, or about 2%. So they are loving themselves. Some earnings, some big tech. Everyone's just can't get enough to buy it out there today. So everything up pretty firmly. Again, S&P up about 2%. The Nasdaq up almost 2.5%. And the Dow up about 1.6% on the week. And all that, the downside earlier in the week and aggressive upside today. That means, listeners, that vol is almost literally unchanged from where we were this time last week. I think it's up about 1/10 of a point. So net show on show, we have done nothing. We are seeing the vol of vol, which we've been talking about for a while, start to come back down to earth a little bit. VVIX still frothy, still elevated at about an 85, but down about 14 handles from where it was this time last week. So it shot up about 14 handles last week and right back down again 14 this week. So maybe some of that juice finally coming out of those puts out there that everyone clearly had to have earlier this week. And VOLQ, of course, the at-the-money vol of the Nasdaq 100 hanging out right now at about 19.5, down almost half a point, about 0.4 on the week. All right, that a long way around to saying, Kevin, not a lot going on net on the vol side, at least right now, but an interesting week nonetheless. Let's start. We are down here at the OIC conference this week, so kind of give our listeners a bit of the lay of the land. What were you looking forward to coming down to this conference? And did you hear any interesting discussions or conversations about the vol landscape this week, sir?
Good question. My big picture takes, I got a couple while we're down here. People are clearly traveling, and it seems like conferences are back, and I like that. It's great to see old friends, colleagues, many of which you've had in here to talk throughout the week, and industry vets talking about 50 years of growth in our business. Pretty awesome. From a Nashville standpoint, the day of the week apparently doesn't matter. People are going out all the time.
I did notice that last night. It was Wednesday night. They don't care. 8 o'clock, they're starting, they're going, having a good time.
Doesn't matter. Those people are not worried about short-dated options. But as you mentioned, and as we've talked about here on the show for the past handful of weeks, 0DTE has been a hot-button issue. There have been interesting opinions. It's clearly great for the industry, but as an industry, I think we could improve the messaging around it. So I will try to do that very briefly. From a NASDAQ point of view and from my own point of view, 0DTE is not a product. So these are simply non-standard options, which have been around since 2005 in the index world, 2010 in the equity world. The shorter dated non-standard products have clearly grown in recent years, but that's simply a reflection of opportunity and demand. During a panel with JJ from Tasty that included some exchange reps and Jason Hedberg from UBS, there were some great points around this issue. Most of the challenges and the potential concerns are on the operational side of the business, or at least that's how I heard it. There are back office procedural hurdles associated with every expiration. You've got things like margins, settlement, that time window for contra exercise. You have collateral issues. And thus far, it's been managed really well. But for the most part, the trading and short-dated products have been centered on cash-settled index products like the NDX, like the S&P 500, or index-based ETF. Now, beyond that, to my ears, there may be data concerns. We were talking before you started recording about conversations with Henry Schwartz, and he pointed out that we got up to like 1.6 million option series not long ago. The strike and expiry proliferation is a data hurdle for brokerage firms, for exchanges, and the fact that exchanges and these firms have been able to seamlessly process about 70 million options at peak a year and a half ago, and on a day-to-day basis, about 40 million is a testament to the resiliency that exists in this industry. It's pretty awesome.
As you can see, Kevin, I've been mostly locked in this room here, having my own little personal conference. So I haven't had a chance to go to all the sessions. But I did hear there was one of the panels this week, or maybe today, where a Nasdaq rep came out pretty firmly in favor of daily single names. Have you heard that? Is that the scuttlebutt out there?
I think the world is likely in favor of that, and exchanges have done a good job at responding where there's demand. Yes, there is clamoring about that, but you're probably talking about Sean Feeney, a colleague and a friend, who I think was eloquent in how he articulated the methodical, the thoughtful way that exchanges are working together to respond to that interest in shorter dated options on perhaps some more single name securities. And we'll see how that evolves in the coming months.
And listeners, if that sounds intriguing to you and you couldn't make it down here to the Options Industry Conference this year, or maybe you just couldn't swing the registration or make the trip down here, don't worry. We got you covered here on the network. We have all the panel content coming out exclusively through us. You'll be hearing that in the coming weeks as well. So if you want to hear what Kevin is talking about and some of the interesting panels, you want to hear Henry's points earlier this morning and everything else, stay tuned for all that on the network. It's always a fun time when everyone gets to participate here in the OIC content, including the man who never leaves Maine, except for next week. Mr. Rock Lobster, you can hear all the panels as well. So you won't miss anything. Does that make you excited, sir? Are you a less grumpy Rock Lobster as a result?
I guess so. I'm going to call myself less grumpy. But I believe somebody on this radio network quite a while ago said, oh, yeah, we're going to have my prediction cash settled single day options for big equities is coming this year. Somebody said that. I don't know who it was.
It seems like the fight now is between that or between playing around with the contra exercise orders as well. They want to maybe adjust that. Some people are saying, why don't we just get rid of that altogether? If you're a penny in the money at 301, you're in the money. It's exercise. That's it. So it seems like there's some push and pull around that, whether we get rid of contra exercise. That seems to be one of the things that's coming up the works for single name 0 day. It does seem like OCC still not super enthused by all the behind the scenes logistics that goes into 0 day Apple and everything else. But there's demand, clearly, and where there's demand, people are going to want to start playing in those waters. So it should be interesting. But outside of that, Mr. Rock Lobster, and your eerily prescient prediction, what else is catching your eye in the world of vol this week, sir?
What's funny is you just said how little things have changed this week. This is one of those weird times where I don't think the market really moved in a week, and I don't think VIX moved in a week. I'm just pulling up my weekly chart. I'm like, oh, it didn't move. I'm looking at my 5-day chart. I'm like, oh, okay. So VIX didn't move this week, although it did peak at close to 20. And the SPX, let's see what happened there. The magnet of 4,100 is still alive. And you know what? If I was smart, I'd trade my own strategy. Every time we're below 4,100, buy it. And every time we're over it, sell it. so I think the biggest vol, I guess, observation is we got to that point again where the vol is in the upside now. And maybe Kevin, I know you're probably shaking your head, but we had pretty hot inflation data. The GDP number was poor, so that was definitely not great. So I guess the algos read that as the Fed's not going to raise 25 basis points. I'm not quite sure how it all worked, or that the market has now accepted that the Fed will just keep raising rates forever, and it doesn't matter. And I'm starting to get into somewhat of that camp because the only thing that has really tamped down stocks has been this, like, the banking scare. And I would have to say today, I guess the banks participated and they smashed the vol out of the banks. So the JP Morgan vol is back down to 20%. So they've had what I would say a relatively vol crushing experience with the banks. So just looking for where things were, like, relative to a couple days ago, the vol has come right back there. So as much as I want to say, okay, like there is some worry, but yeah, there's a dead low volatility on Monday. And I just see like JP Morgan Bellwether, the implied vol was 18 and now it's 1987, but yesterday peaked at around 23.5 into the close. So this banking crisis, which was pretty much the only real vol, or I think the source of vol in the last month, it comes out like a puff of smoke almost. Like, oh, there's another bank or this FRC, all of a sudden all their depositors left, no surprise. And now what are they doing with all the assets and everything else? So I think we're going to kind of see fits and starts of this. And I think it's a pattern for a while, but I have to say, I honestly did not expect upside volatility, like meaning the market just goes straight up to the moon and basically just run by 4 stocks again, or 5 stocks. It's the Apple and Microsoft and Facebook. I'll never call it Meta because it's a dumb name. And what's the other one? One of the other ones. And then Amazon hasn't even reported yet. I guess that number's coming out. So the fact that and it's up $9 after hours. So I guess Amazon knocked the cover off the ball after earnings, after being up $5 today. So that is $15. Now, as far as I can tell, there's almost no growth in these companies. Microsoft grew a little bit, but historically at a low level. But it's enough to just the fact that they're keeping revenues the same is enough to just drive the stocks up. So listen, the market does what it's going to do. I don't get it, but it's certainly enough to lift the Qs higher and higher. So you have to think like there is some pent-up demand for stocks somewhere. And this whole banking thing threw a wet blanket on it. And from a volatility point of view, again, we have, a fairly steep contango and low vol into this Fed announcement. So I don't know what the odds are on what the Fed is going to do, but they're going to do 2 things. They're either going to raise or they're not going to raise. And right now the market doesn't care, because if they raise, everybody expects it, which is probably the right thing for them to do. But if they don't raise, everybody thinks the rate hikes are done. I don't even want to tell you where the upside is. We might gap up 200 points SPX. So, and I know the chances of them not raising are, I feel, are very small, because they need to keep credibility at least there for a while. Because as long as they said they're going to raise, they've done it. So I'm going to go just with history there. But if they don't, on the off chance they don't, and they're like, okay, the banking crisis got us freaked out, we think we're doing what we need to do. I couldn't even tell you what the upside is going to be. I don't know what you and Kevin think, but I like 4,300, 4,400 in a day. Like, it'll just be like bling. And then of course everybody will realize that they're not raising because they're worried. and things might be different, in a week or so. But holy gosh, I feel like those options right now, and of course I'm going to be in Chicago, so it's going to be hard for me to trade it one way or another. Just because doing all the stuff that I'm going to be like you, Longo. I won't be in front of my computer all day.
Welcome to my world every day of the week, sir.
But I would say the straddle, the May straddle, is still around $6 for May 03. And the May 5, which is the Friday straddle, is about $8. But I have to say, okay, the May 05 420 calls are only $1. So I think there is some fun and goofy. There is some fun sort of trades around the possibility of what's going to happen. So I think there are some interesting trades around that, especially, and also being able to, because VIX was just 16. So again, you have the earnings you can only say the earnings have been decent. Like most of the big banks have been decent. Like certainly, I mean, the expectations were low, but again, stocks meet expectations and people feel better, and they're going up. I have no interest in getting in the way of this. So where does vol go now? There's really no banking cry, and everybody, even if there's one bank that goes, everybody knows it's not a big deal at this point. So where does vol go? And where do these banks go? So it's I'm sorry, and where do these? And it feels like, the Fed could set up a very low vol kind of, market go up scenario. So as weird as it sounds, the only thing I can think that's been screwing the market up the last month or so, or month and a half, has been this, rightly so, all the banks going. It would be nice to see the banks rally a little more, but they did not catch many dollars. They caught some dollars today, but they didn't catch, nothing like what Microsoft or Meta grabbed today, just tons, basically just unlimited buying all day long. So I'm happy not to have a dog in that fight. But there definitely dollars were coming back in today in a big way. So, but that was enough to make VIX, I think, where did it hit a low of 17 relatively early in the day, probably after the first hour, and it did not move from there because just the straddle volatility got all blown to pieces. Let me see here. Yeah, so VIX bottomed at around noon, and that was it. So, and then the market just kept going straight up. So, when that's happening, the at the money vols are getting pulled higher, and the liquidity providers are just letting vol go up. Even though VIX looks like it was down on the day, but it would be hard to see implied volatilities per strike really going down significantly, especially after a move like this. So those are my big observations to take up a lot 15 minutes this afternoon.
Big observations indeed. Let's see if we can keep those big observations rolling out there to the land of the volatility surface. And coming into the start of the show, surprise, surprise, listeners, it is lower. Lower slightly, though. We're not seeing a ton of evolution out there across the curve. We're seeing the May contract down about 1/3 of a point when we kicked off the show, probably a little bit less than that now. And we had the June contract down close to 1/4 of a point. But again, not the most insane evolution we've seen out there. Kevin, I know it's kind of a bit of a quiet week on the vol surface. Anything catching your eye out there this week, sir?
Andrew covered a whole lot there. I might take issue with a couple of things. Marginalizing another potential bank failure could be done at your own peril, at least in my opinion. I might make the comparison to, say you've got a bathroom upstairs and you see a little sort of stain developing on the ceiling and you're like, that's no big deal. But before long, that stain can spread and you might have a waterfall coming into your kitchen or your living room, whatever's down there. I'm not saying I expect that, but to say if another one fails, who cares? I don't share that sentiment necessarily. Andrew made another point about the banks not really seeing a windfall of dollars despite some reasonable performance this quarter. When I hear stuff like that, I have to point out that over the past 2 decades, that's kind of been the case. And he mentioned the outperformance on the part of Facebook. I agree with you there, man. Meta's stupid name. The Apples, the Amazons, the FANGs of the world. That has been going on broadly for decades. And I think a lot of the outperformance, I'm going to talk my book right here, of the Nasdaq 100 relative to the S&P 500 is that it does not include financials. So from that extent, the index is somewhat insulated from this idiosyncratic risk that we're talking about now. And then big picture, to say that we've gone nowhere in terms of the vol or the market this week is sort of like me saying, because I was in Chicago on Sunday and I'll be back there on Friday, I didn't go anywhere, but I traveled a couple hundred miles in the intervening days. And this week you saw the first 1% close over close move in the S&P 500 in over a month. That's the longest stretch in a very long time. And today you see a 2+% move higher. Vol tends to cluster. And is this the beginning of higher realized volatility levels? I don't know, but I do think that that's possible, especially when we're in an environment where this debt ceiling issue is going to be an overhang with a lot of political grandstanding for the next potentially handful of weeks to handful of months. And I'm going to be tuned in to see how that plays out.
Let's get out there and see what's cooking out there on the surface. First off, Mr. Rock Lobster, if you have any responses to any of that, feel free. And then B, if you have anything catching your eye in a relatively quiet net week-on-week thing here for the vol surface, have at it, sir.
Yeah, I mean, Kevin's was definitely right because we have, 24 trading days or 25 trading days without a 1% move, and then we get 2 back-to-back. So that's for sure. But we ended up at the same place we started all that. But we did have some vol finally. But most everything else, like the Q's outperforming financials, but generally, like you would think that you would get the financials at least back to where they were, let's say, a week or 2 ago. So I think the only thing that was bothering me about that was they weren't doing that. So there's still that banking issue still not going away, and that does tend to sort of drag everything down. But the market has shrugged off this latest bank issue with FRC, as far as I can tell, at least as of today. So I get all his points on that stuff, but my surprise is when we rally like this and we rally so hard. I feel like it's hard that these rallies are sustained, and that's why I was just looking at vol. So the at-the-money vol, the current at-the-money vol is only down like 20 basis points in the May 19th cycle. So that's almost no change in vol for an option that was 2% out of the money from the S&P 500 yesterday. So, I read that as vol going up, basically. If that option, the vol actually, that vol basically is unchanged for the day. So I think the vol went back into SPX options, even though VIX will read down today. So I think that in itself says, yeah, we could definitely have some more vol. So I like the idea of, just like I said, for next week, I think those straddles and juice in the S&P 500 looks relatively inexpensive to me. So I'm gonna go with the Kevin there saying he's not sure. We're not sure if this is of the realized vol is picking up, but the options look enticingly priced right now, I would say, versus the moves we've had just over the last 2 days. So that part on there, I like that, and I might end up just putting something on tomorrow, depending how aggressively they take. If they take vol down, or they take the weekend out aggressively hard for next week options tomorrow, you might see a low vol tick for next week will be tomorrow. So that's one thing I'll be looking at least until the end of the day. So obviously we won't be able to talk about that because you won't be around. But I think that it does look like an opportunity when you have SPX up 2% in a day on, a VIX that's closing 17. Options do sound inexpensively priced, I would say, right now.
Well, let's hope we get a little bit of infusion of realized vol. We obviously are getting that today. I mean, last week on the show, what was it? We were in first percentile across the board, right? For all of the realized metrics going out 100 some odd days. It was ridiculous. So let's hope we get a little bit more juice percolating in out there. Speaking of things percolating, VIX volume starting to percolate out there right now. We are seeing over 500,000 contracts on the tape out there today. 573,000 contracts. So pretty impressive level out there. I mean, it's not threatening the ADV, which is 691. That's moving in the wrong direction. It's down about 29,000. But again, a decent day, all things considered. A little bit of that upside surge towards the end of the day seems to have contributed towards that. Let's look out there to the top position, see what's lighting it up out there from an overall top 10. What is open for size in VIX land? Let's find out, listeners. It's been 9 calls and 1 put forever for the better part of the last month, and that is still that case this week. 9 calls to 1 put, listeners. And that first put, once again, not hard to find, coming in at number 10, 142,000 of the June 15 puts, followed by number 9, 146,000 of the June 23s, number 8, $1.59 of the May 32s, number 7, 171,000 of the May 25 calls, number 6, $1.95 of the Sep 25s. That's interesting. That's an interesting new addition to our list here. Number 5, 196,000 of the May 24s. Number 4, our old friend, is it 50 cents? He's got 250,000 of the May 50s if he is. And number 3, 265,000 of the May 30s. And then, of course, number 2 and number 1 still dominating the list this week. Number 2, 430,000 of the June 40s. And number 1, about 500,000 exactly now of the June 30s. So that June 30-40 vertical still alive and well out there, listeners. We'll break down some of the paper that's catching our eye out here this week. Obviously, today, 573,000 contracts on the tape. The big dog out there today, 38,000 of the May 20s, followed by 26,000 of the May 25s, 23,000 for number 3 of the May 18 puts, number 4, 22,000 of the May 19 puts. So maybe some vertical or roll action there. And rounding out the top 5 today, we got the May 17 puts, 19,000 of those bad boys. Yesterday, a little bit lighter paper, 494,000 contracts on the tape. The big dog, such as it was yesterday, about 31,000 of the July 24 calls, followed by 21,000 for number 2 of the July 23 puts. So yesterday, July Palooza, 20,000 of the July 23s. Number 4, 20,000 of the July 36 calls. And rounding out the top 5, yesterday, 20,000 exactly of the July 34. So interesting assortment of July paper lighting it up yesterday, which was, of course, Wednesday. We are recording on Thursday this week, listeners. Tuesday, 877,000. That was the big day of the week. 71,000 of the May 20s. That was the big trade back there on Tuesday. 37,000 of number 2 of the June 30s. Number 3, 31,000 of the June 40s. So once again, June 30, 40s trickling in there. Are they taking some off? Are they unwinding? Are they selling some of it out? Intriguing stuff. Either way, not enough to really move the OI too much. Number 4, 25,000 of the May 30s. And number 5, 24,000 of the May 25s. And then Monday, a pretty similar day to today, at least volume-wise, 590,000 contracts on the tape. The big dog on Monday, 45,000 of the July 24s, followed by number 2, 26,000 of the May 18 puts. Number 3, 25,000 of the May 27s. Number 4, 23,000 of the July 23 calls. And rounding out the top 5 on Monday, 23,000 as well of the July 23 puts. So maybe some straddle action going up there on Monday. Mr. Rock Lobster, did you notice those? And anything catching your eye out there in the Palooza of VIX paper this week? Oh, you're so excited you have muted yourself, sir.
That's because I like talking to the screen.
You do like talking to yourself. I know that.
You would think like 10 years I still haven't got that figured out, but apparently it's going to be with me forever. So from a paper point, you know what I saw? Like I was surprised, kind of like the dearth of the May paper. Like, okay, those 16 puts in May are down. They got down to 7 cents yesterday, and they were like trading a dime all day or available at a dime. Only 6,000 traded.
It's all freaking July. It's all anybody cares about, it seems like.
I'm just looking at the short term. I'm like, okay, well, they don't want them. So, like once again, kind of what Kevin said a little bit, but maybe the realized vol is going to pick up again. Like, because we did have a couple of big days, but like there's very little. And the 17 puts are 30 cents. So I'm just saying from a pricing point of view, 18 puts are 60, 67 cents. I think they trade as high as 70, 72 or something today. So there's not like, we have 3.5 weeks to go, or a little over, to VIX expiration. So yeah, you would think there had been like a little bit more action on these, but it was relatively light. Maybe, I don't know what people are, they're paying up for sort of this long-term stuff again. I just thought there might be a little bit more action on some of that stuff. I think, to be quite honest, I think the June cycle is now looking a little more interesting again, because earnings will be out. So all of those puts are still, and I was pricing them today, 19 puts in June are less than $1. So, you look at that stuff and you go, well, it's not super pricey. Although, the futures are sky high, but I think that's reasonable pricing. And there was a little bit more action today on some of these Junes. So it would not surprise me to see more there. But as of now, you just haven't seen that just piles of paper coming into those strikes yet.
Let's see if we see those proverbial piles of paper. Say that 5 times fast. Piling into the ETPs out here, listeners. Let's start in SVIX, our inverse friend, hanging out at 1860 when we kicked off the show. That literally puts it unched on the week yet again. That's kind of a theme for the week. Unched on the week, listeners out there. Not a lot of volume out there today. Only about 500 contracts on the tape. The ADV is still hanging out between 900 and 1,000, kind of unchanged there as well. So not a big week out there, XVIX, from a volume perspective, even though we did have a little bit of movement as we were starting to test some interesting levels out there in VIX land. The top position in SVIX remains this week 1,500 exactly of the May 8 puts, so not a heck of a lot of evolution out there. Right behind it, though, we do have 1,100 of the SEP 35, so talk about interesting different positions, the 8 puts in May and the 35 calls in September. We have joked about those before. What would it take to get SVIX up to a 35, listeners? That would be interesting. We might have to have a revisit of 2017 when vol went to die to get SVIX back up to those levels. Speaking of our theme for the week, unchanged, UVIX 12 when we kicked off the show, unched on the week yet again. In terms of paper out there, 6,250 contracts on the tape, so just slightly more than its ADV, which is about 61.25 out there. So not a ton of paper blowing up the doors there today. In terms of action and in terms of size positions, a big position out there, 1,250 of the April 13 puts, followed by 1,000 of the April 12 calls. Again, these are all end of month April, so expiring tomorrow. Out to UVXY, what can we say about this thing? It's unched as well. What a week, unched on the week here. 180,000 contracts here today. 171 is the ADV. That's down about 33,000 from this time last week. Andrew, you teased us all. You teased us all last week with rumors of an impending reverse split. You had to walk that back last week. Any updates, any new news for us on the UVXY reverse split front?
No, I'm never believing Twitter again.
Never. You're done. You're never going down that road again.
I tried it once. It was a dismal failure.
Burned by Twitter.
Well, my question is how low are they going to let UVXY go?
That's what I want to know. What are they doing? They want to go into half? And what are they waiting for on this thing? It's the volume's falling off a cliff. No one's touching it. The use case for it is rapidly dwindling, like the underlying. What are they doing? I don't know. But apparently, what do we know about products, Mr. Rock Lobster? We just
I guess not. We know nothing.
Apparently, we know very little because the powers that be want to keep this thing below $4. Apparently, for the rest of our days. The big position out here in UVXY. Speaking of $4, it's the April 4 calls expiring tomorrow. 27,000 of those bad boys are open out there, followed by 26,000 of the June 6s. So, again, anything could happen between now and June expiration, but 6 at this point seems like a bit of an uphill climb for UVXY, but we shall see. And VXX, what was that word? Oh yeah, unched, literally unched, 39.40 on the week from where it was this time last week. 41,000 contracts on the tape. 36,000 is the ADV, down about 1,000 this week as well. So not a heck of a lot going on. Net out there on the vol ETP side, Mr. Rock Lobster? Anything catching your eye out there in the universe of vol ETPs, aside from the fact that they keep wanting UVXY to just go to zero?
I mean, there was VXX had a little bit of life this week as far as movement. So as far volume wise, I didn't see anything in particular, but it is with the kind of rich futures, it's back to decaying about a little over $1 a week, theoretically anyway, like $1.20, $1.25 a week. So that's $5 a month. Maybe that's why they're not in a rush to split UVXY, because if they split it, I don't even know what the daily decay on UVXY would be. It would be pretty substantial. They did 10-to-1 split or whatever. It'd be 40 cents a day. So it would be dying at $2 per week or $8 a month. So it's kind of, I guess maybe they'd rather split it in backwardation. They wait till they have a backwardated market than split it. So as far as that goes, I didn't see a whole lot, but at least it's moving around. There's some decay, and it's back to being kind of its fun self as a trade, I would say. Segment of the dark old days when they split it from their net asset value, and it just became sad.
Are you actually trading this thing again? I know your compatriot there, the meatball, started dabbling his toes in it. Have you started trading VXX again?
Yeah. I mean, still works pretty well for, like the little slidey trades. You buy VXX puts and some SPY put flies, and you get kind of a little double action trade. You can collect decay on both sides. So it's a kind of it has a funky net market strangle position, but you have positive net decay for the position. So it's one of my favorites when the contango is rich like this. So yes, I'm back to doing it. It's been working okay. So it's always nice to get a positive market gamma with positive decay at the same time. I find that is a advantageous position to trade. So so as long as it's doing what it's supposed to, it goes back in the kitty. But I'm not doing any long-term VXX. Remember we used to talk about buying those puts a year out, and
that used to be the set it and forget it trade, right? And you can't really do that anymore. You got to keep it near dated, and you got to go small dollars. Small dollars, because you don't want to get burned by these crazies again.
Yeah. So, just smaller, decent volume size, enough to make some money, but not too much to make yourself miserable if they pull some crap on us again. So, you just have to put the product where it belongs, and that's kind of where it is. But still, the fact that it does have those kind of more aggressive decay profiles, like 1 to 2 week puts, can work really well to give you that, that positive market side. And if we just kind of sit here, it pays. So it's a good trade in contango. And it's back. So I actually just finished closing the VXX put side this morning on it. So I can't complain about it. I could have held my put spreads a little bit longer, but I didn't sell the bottom, but close enough to make me happy. But again, VXX, it actually hit a low midday and then sort of rallied back a little bit from that level. So the VIX futures, once again, they traded lower and then back up because just the rally was so aggressive. So it will be interesting to see if we hold up tomorrow, but at least right now it appears after those Amazon earnings, I guess their revenue grew 1% this time. I have to see what they are. But I would expect us to have sort of, at least some kind of continuation tomorrow, the way that this is going right now.
Yeah, I have to say, after all the crap I talked about VXX, that I have started to eyeball it again with all these moves out here. With the caveats, everything I said was correct. Listen, everything still holds true, but it is starting to do what it's supposed to do again. So that does make it a little bit intriguing. Kevin, I know you watch this whole universe of vol ETPs out there. A lot of interesting things going on. A lot of them unched on the week. What's catching your eye out there this week, sir?
I do watch it because I keep my eye on term structure for futures-based products, and I love being around people that understand the impact that relationship between, in this case, month 1 and month 2 VIX futures has on these ETP products. Now, to Andrew's point, and this is not investment advice, but sign me up for long gamma positive theta positions 8 days a week. Yes, please. And going back to something we talked briefly about last week, when you are early in the VIX cycle, so your April future had rolled off and we had essentially the entire month for May. The May-June spread was about $2 wide, if memory serves, on Friday last week. And I'm looking at that thing now, and it's moving out toward, it's like $2.40 wide on today's settle. That is a steep contango. And to see interest in VXX in those scenarios makes a whole lot of sense. And if you can structure something with the risk-reward profile that Andrew's alluding to, I think that too makes a lot of sense. I would be a little bit cautious with a spread that's wide with this much time ahead of May expiration. Beyond that, I would just point out that volume in Nasdaq 100 index products have been really strong, particularly this week, and that excites me for obvious reasons. Perhaps that's associated with the big moves you've seen in some of the names that we continue to mention, but hopefully we can keep that up.
Speaking of those names everyone's talking about, we do have the earnings move result, earnings season, and earnings trades reports. If you'd like to sink your teeth into a little bit of single name volatility, we got it for you there, listeners, because we like you folks. Completely for free, theoptionsinsider.com. Click on the Options News and Articles tab to dive into all that fun. As we dive really quickly into some of your thoughts, it is time for a little bit of the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everyone, welcome to the Volatility Voicemail, the portion of the show where you folks take the reins, your questions, your comments, your insights. We also gain some of your thoughts on our question of the week. And this week's one is a timely one, very relevant for this show as well. Of course, we talked about it on the show last week, the impending launch of one-day VIX. It is now here. It is one of the many talks of the conference, along with 0 day and everything else. One-day VIX obviously lends itself very much to that conversation. But you folks, at the end of the day, are the ultimate arbiters. So we thought we'd put it out to you. One-day VIX, it launched this week. Are you interested? Do you think this short-term measure of volatility will be useful for your trading, or is it just another meaningless number to clutter up your trading screen? So very simple, yes or no this week. Mr. Rock Lobster, we'll start with you, sir. What do you think our audience is voting for? And if you have a vote, have at it.
I think it will be meaningful. I'm still trying to figure out the calculation. But I think the people will they don't give a dang about it because people barely care about what VIX, let alone about one-day volatility. So I'm going to say the people aren't going to care, but I do. And I'm still trying to figure out how they calculate it.
All right, and same question for you, Mr. Kevin. Are you intrigued by all things one-day VIX? And then what do you think our audience, are they intrigued or are they dismissive?
If they're tuning into a VolView show, they're at least casually interested, would be my assumption. And speaking personally, I too am maybe a little bit more than casually interested. I mentioned this last week and I continue to. A clearer or fuller picture of the vol surface as indicated by a variety of VIX measures, I think is interesting, particularly against the backdrop of very active short-dated option trading. So yes, it will remain on my radar. And before we started recording today, you and I were talking about kind of the interesting math and rolling element of that time exposure between that expiring day as it moves out toward the next day or the front 2 days. So understanding that a little bit better, understanding what drives any new product is really, really key. And having conversations like this, I think, can be helpful to that end.
Hey, listeners, check it out if you haven't already. Henry's spot on the option block we just recorded earlier today, where he kind of breaks down some of the mechanics of how that one-day VIX works. It's not just as you might think. It actually is incorporating towards the latter half of the day some of the 0-day options from the next day into that calculation to try to make a nice constant measure out there. So it's a very interesting thing. Check it out. Unfortunately, it doesn't seem like a lot of you are going to be checking it out. Right now, our audience, 76.3% saying no, they are not interested. It's another indicator that's going to clutter up their trading screen. 23.7% saying yes. It's short term. Maybe a lot of that is we're down at the industry conference right now. A lot of industry folks are voting because I know that it's a more of a mixed bag here than it does seem to be with a lot of the retail folks out there. But either way, you got about a day left, listeners. The question of the week at Options is the place to go to make your voice heard as we keep going on into our final, some might say the most difficult, the most dangerous portion of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to divine what the vol gods hold in store for us for the coming week. A little bit of a cheat this week because we are recording one day earlier, even though we all predicted for this time tomorrow. So we'll build in a little bit of fudge, a little bit of wiggle room here for all of us here on the show, because anything could happen over the next 24 hours, of course. On the show last week, it was myself and the greasiest of meatballs and Kevin and Jamal from Tasty. And let's see, we are coming to the end of the show. We had, VIX closed today at about a 1703, and we had VOLQ at about a 1947. So actually, I was looking pretty good at my 17 and a quarter. So not quite within our margin of victory of 0.1, but pretty darn close to be respectable this week. After that, the next closest was Jamal at 1835. And then Kevin, you were at a 15.5, and Mark was feeling a whole lot of no vol, 1441. You got a little aggressive with that to the downside. On the VOLQ front, I was 0.02 away. 1947 is where VOLQ went out, and I was at I refreshed. We're at 1959 now, so a little bit farther away. It's 1935 is where I was though on the VOLQ front, so still pretty close. I'll take that within 0.2. I'm still dialing in my VOLQ models here, listeners. Mark was at an 1881, Jamal was at a 20 3/4, and Kevin at a 16 1/4. So no winner chicken dinner this week, even though I did come the closest. So maybe I'll be nice. I'll go first this week. I'll kick things off for everybody else. Like I said, we're at about a 17 even in VIX cash right now, 19.5 roughly in VOLQ. So again, we have earnings, we have Fed, all sorts of fun. That could suck a lot of this juice out of the market next week, or we could see a little more of these kind of 1+% movement days, and we could see a little bit more realized vol actually trickling back into the markets. I'm going to say the latter because that's a little bit more fun for us here on the show. So I'm going to say this time next week, we're going to be at an 1835 in the VIX. And then where's that VOLQ spread going to fall? I'm going to say 20, back over a 20 for VOLQ. I'm going to say 20 1/4, 1.9 points there for that spread. So that's where I'm hanging out. Let's go to the Rock Lobster because you weren't on the show last week. You get to go next, sir. What are you feeling? I set the table for you. How nice am I?
You're quite nice. I'm going to say 1625 for this week. 16.
You're feeling the Volmageddon, huh?
I'm feeling that you got the Fed. I feel like there's not going to be a lot of surprises, and it's just things are going to just kind of slide to that number.
And what about VOLQ, sir?
That's right, VOLQ. I got to get that. Hold on, I'm pulling it up right now.
It's about 19.5 closer right now. 19.
Yeah. My problem with the Nasdaq is it's crazy. No offense, Kevin, but my gosh, it's rocking and rolling.
You can't see him in person. He's deeply offended right now. He's turning red. He's very angry.
I would say, if anything, we're going a little less aggressive. I'm going to say, I don't want to say 1929. That sounds too weird. So I'm going to go 1928 VOLQ.
A little superstitious on that one. 1928.
Yeah, well, I got to go with the super. I'm taking the superstition.
All right, Kevin, you can unleash your fury on the Rock Lobster for his temerity to question VOLQ and Nasdaq. And then what else is catching your eye out there? What do you expect of this time next week, sir?
Man, I love when you use words like temerity. I'm a sucker for that. Well done. I have nothing to unleash on that. There's absolutely no reason to. And I don't really think he's complaining about an up 2.7% day. Now, my take is I continue to be concerned about this First Republic et al. Sort of slow drip financial issue. I don't know anything more than anybody else, but I wouldn't be shocked to see them go into receivership sooner rather than later. I also know that we have a Fed meeting where 25 basis points is all but a lock, and market expects kind of a lower, not higher for longer and potential cuts later this year. You, I believe, have a jobs number next Friday. So I think that confluence of events could put a bit of a bid in vol. I'm going to go about $1.50 higher on spot VIX, so 1850, and I was going to go 20.25 on VOLQ, but I'm not going to carp you. I'm going to go 20 even, but $1.50 widespread, fairly narrow, because of that NASDAQ 100 outperformance.
There we go, listeners. That's our markets for this week, and that is going to do it for Volatility Views this week. Kevin, it was a pleasure doing it in person. We got to do this more often, sir. In the meantime, if folks want to catch up on all the great content and everything vol you guys have over there in NASDAQ land, where should they go? What should they do?
So I put out pieces fairly regularly. I wrote one that went out this week about how the dynamic between historical and implied vol for broad-based indices has returned to a more normal relationship in this year, and that 2022 was fairly abnormal. If you want to read that or anything else I put out, that should all be on my author page at NASDAQ. And then you can sign up for just regular delivery, should that be of interest.
And Mr. Rock Lobster, if folks want to check out all of your many legion of volatility musings, where should they go? What should they do?
Yes, they can go to optionpit.com or go to Money Map Press. If you go to Option Pit, though, you get 10% off anything. If you say you heard me on this here show, so you can call our customer care team or ask for Andrew or Ted, 888-TRADE-01. So you can muse around, and you could Volman does appear on Sundays in our Pit Stop, which is a free newsletter for all folks that want to read it. And I have to say, his musings have been not bad over the last couple of years.
Volman's back? I didn't know Volman had returned. I thought he was on extended hiatus.
Well, he went from Twitter, instead of giving it to like people for free. I would rather give it to our subscribers or somebody actually that sends me their email address. So basically, everybody on Twitter, they get OI Radio. That's what they
That's why I haven't seen Volman again. He's hanging out in the exclusive club these days.
Yes, exclusive. I took a page from somebody's book to create an exclusive club.
Well, check him out. You can learn more about Volman over there in the land of optionpit.com. That is going to do it for us on Volatility Views this week. It's also going to do it for us on the live and indeed on-demand content this week. Stay tuned for a lot of great shows hitting the pro side and, of course, hitting the on-demand feed coming up later this week and, of course, throughout the next coming weeks. And, of course, as I mentioned at the top of the show, if you are intrigued by any of the panel content down here at OIC, we'll have that coming for you because we love you folks, completely free, coming up on the network pretty soon as well. And then we'll see you back here next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by Nasdaq. From its inception, Nasdaq has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, Nasdaq proudly launched the Nasdaq 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the Nasdaq 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched Nasdaq 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on Nasdaq's full suite of index options products at www.nasdaq-100-XND-NQX-NDX-VOLQ. Nasdaq, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.